any process to amend any provisions of the PIA must be transparent, and there must be very wide, in-depth consultation with stakeholders, because it's really about the stakeholders and not about the government or people.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be discussing repositioning Nigeria's oil and gas industry for investments and sustainable growth. My guest joining me virtually is Mr. Chukwuemeka Osuji. He's a partner oil and gas with Olaniwun Ajayi legal practice firm. It's great to have you again joining us virtually for this conversation. After a while, Mr. Chukwuemeka.
As always, I'm happy to be here.
Thank you very much. Let's begin, because this industry is seeing a lot of developments, and of course, it's important to look at what's happening. Let's begin with your assessment of the industry within the context of the Petroleum Industry Act implementation and the current administration's policy push to attract investments and make it a sustainable industry to pivot our economy.
Well, I will start by saying, thankfully, I'm one of those who believe that the PIA is perhaps one of the most comprehensive attempts we've had in the last 2 or 3 decades or so to sort of recalibrate our oil and gas ecosystem. And it covers both legally, commercially, institutionally, right? But it's important to mention that its success lies not just in the PIA itself, but also in what we call disciplined implementation. So, for example, over the last few years, we've seen progress that's been born on the back of the PIA. For example, sort of unbundling of the NNPCs to a commercially oriented entity, establishment of the 2 upstream and midstream and downstream regulators, and then gradual operationalization of host communities, etc. Right? But I think the important thing to note is that the policy direction of this administration has, I think, for me and for many others in the industry, brought what we call commercial realism, particularly around things for those who pay particular attention to fiscal incentives for gas. You can then see a more liberalized midstream and downstream sector, as well as, positioning to show openness to private capital. Yeah. So generally, I think we've made good progress, particularly born on the wings of the PIA. And what we want to continue to see is now coherence. So for some of us, we believe implementation must transit from just compliance checklist to performance outcomes, right? So we need to begin to see steps to accelerate project approvals, increase transparency in licensing rounds, and then making sure that any sort of policy or political ambiguities are removed entirely from the process. So if you can succeed that momentum, I think we'll actually be on the path to unlocking what I think is the $1 trillion potential of our sector. So again, for me, the PIA is not the destination. It's merely the framework for the discipline and the performance in the sector that we need to see. And then implementation, as I mentioned, must continue to revolve around compliance to measurable outcomes, while clarity and consistency should be the new incentives.
Very interesting intro. I mean, you're saying clearly that the success in the oil and gas industry hinges on disciplined implementation of the PIA. And of course, implementation should come with performance outcomes, if that's what I'm hearing clearly.
Correct.
Very, very important. Of course, we look forward to that. $1 trillion just oil and gas industry alone. That would power so much for Nigeria and Africa. But let us look at the regulatory standpoint, which is very critical to this industry. We've seen that the PIA has made us have this very regulatory regime of midstream, downstream, which is the NMDPRA, and of course, the upstream, the NUPRC. A lot has happened. But are we making progress in enabling a globally competitive oil and gas industry?
First and foremost, I think that clear delineation of roles between the upstream regulator and the midstream and downstream regulator is a major leap towards what some of us think could be termed as global standards, right? And we've begun to see some of the effects of that delineation. For example, the NUPRC has, over the last few years, issued very, very quickly, rather unprecedented regulations and guidelines to guide all operations in the sector, host community implication, field development plans, even asset divestments. And we've seen also a host and a raft of regulations emanating from the NMDPRA. So that's absolutely fantastic. But competitiveness in itself is really beyond regulation, right? It's also about what I call regulatory behavior. And what do I mean? Investors look towards seeing predictability, speed, and fairness. So it's important not just that regulators do certain things, but they must also institutionalize these things. And that's what we're looking for. Supervision, transparent pricing frameworks, credible enforcement. If you begin to see these things, and not just because it's happening because of regulatory changes we've seen, but because they have become institutionalized, that way you would then definitely strengthen confidence in the Nigerian, not just the Nigerian economy, but also in that regulatory space. So again, as I keep saying, regulation must be an enabler. It's not just an end in itself, and it shouldn't be a gatekeeper. Regulation and regulatory activities shouldn't be gatekeepers. They should be enablers for the economy, right? And then predictability is key. And I've mentioned that for you to then begin to see that predictability, you must begin to get a sense what I call regulatory behavior, that we are institutionalizing some of these things. And if you do those things, those are some of the things that you could call the currencies of investment confidence, right? So we must move from form to substance. So not just in what we are doing, but in the way in which we do it. And that our body language must then show that we have firmly institutionalized these things. I think if that can be done, which I believe we're on the path, it will actually catapult us to where we hope to see be in the next couple of years.
Very interesting. The fact that the delineation has seen us leap towards global standards. But of course, one area that stands out for me, like you said, is the transparent pricing framework, which we need to see an enforcement, especially in the midstream, downstream. It's very important. NMDPRA has its work cut out for it. And investment in its ability to carry out those required tests, because they are the regulators that ensure that the households, whatever petroleum products goes to households, is quality. And that's very important too, Mr. Chukwuemeka. Isn't that?
Oh, yes, it's absolutely important. And I think if you've seen what's happened in the industry over the last couple of years and months, you begin to see some of those nuances begin to come out in terms of impact on both the operators and investors coming into the sector. So I think it's absolutely important.
Very important. Now let's go to the assessment of concerns raised by experts. Was at a recent forum in the oil and gas industry, and the keynote speaker was talking about the proposed amendments to the PIA and saying that it should be ecosystem focused and it shouldn't be just the public sector or policymakers coming up with something. It has to carry along all stakeholders. Are you carried along? Because I know you're involved in that initial process of what we have today. And what are those issues that need to be addressed as we look at these amendments to the PIA?
Sure. Okay. As you alluded to, we're one of those that drafted the very first versions of the PIA, a very long time ago. So it's a thing of pride to see how that document has evolved. But at the same time, we must be careful when we do certain things, just in terms of the signaling we're giving to the industry. So I would say the concerns are legitimate. And what is important is the extent to which the government is taking steps to address those concerns. You must remember that the PIA was painstakingly negotiated to balance, and this was negotiated over several years, to balance both physical, commercial, and then even community interest, right? So any proposed amendments must be driven by clear evidence. It shouldn't be just politics or expediency. There has to be clear evidence that if you take specific steps, these are likely to be those specific outcomes, right? So, for example, clarifying the overlapping roles or functions between NUPRC and NMDRP. I absolutely agree with it. It's something that's important to do. Or strengthening domestic gas utilization. Those proposals make a lot of sense. But you also have to be careful about some of the other proposals, because you may risk unsettling investor confidence, right? Particularly when you begin to introduce some sort of discretion in what we had hoped that the PIA was now introducing predictability, right? It needs to be clear that laws will not keep changing when the political tide changes. And at some point, you must avoid what is known as legislative fatigue. You can't keep tinkering on laws, working on them again and again. Stability is key for incentives of investors. And the investors are not just looking at the fiscal terms you have. They're looking at what is known as general, credibility of the policy environment. And that stability and consistency is key. So it's important that even if we are proposing any amendments, it must tally with the original spirit and intent of the PIA, which is to, in my view, it was largely to create a transparent, predictable, and a market-led oil and gas industry. So that's important. Now, you've asked me, what do we think in terms of things to pay attention to? I think the first point you raised is critical. Transparency and stakeholder consultation is key. Any process to amend any provisions of the PIA must be transparent, and there must be very wide, in-depth consultation with stakeholders, because it's really about the stakeholders and not about the government or people. Then the clear role demarcation, as I mentioned, it's something that is critical, and we must continue to work on it just to ensure that it's done properly. So, but if you see some of the proposals, for example, having NUPRC as a concessionaire, and you then begin to think around what are the challenges with that? You should be a regulator at the same time. You're a concessionaire. So that means somewhat you're playing within the commercial space. If you must do that, I'm not saying you have to or you don't have to, but if you must, there must be strict guardrails and firewalls around the entire process, right? The governance safeguards must be clear. Conflict of interests must be clear, and there must be clear delineation of regulatory oversight with some what can now be termed to be commercial functions. That also ties into capacity building. If that is done, then that means that the regulator must spend some time building sufficient capacity to be able to carry on those functions, right? You must also remember that there have been a whole lot of commercial arrangements on the back of the PIA as it is today. Now, if you start these proposed amendments, or when you then eventually implement them, I think it's important to review its impact on these commercial arrangements in the market, and then building a transitional arrangement to make sure that there's a bit of predictability of terms for those who've made investments thinking in the next 5-10 years, PIA will remain as it is, right? Just to make sure you identify areas of impact, as I mentioned, and then building transitional frameworks for the existing structures. Then again, I think we should pay attention to areas of corporate governance and best practices. For example, for NNPC, irrespective of what is decided to be done in terms of the powers of NNPC or the scope of its operations, now that we are transiting from having a two-shareholder institution to a single shareholder institution, it's important to make sure that that single shareholder just remains as it is, just a single shareholder, right? The strategic independence of the NNPC board and management must be maintained. It's critical. So even though you decide whether it's one shareholder or two shareholders, really, it's not about the number of shareholders. It's really what you do with it. The strategic independence is key. It's now a commercialized entity incorporated under CAMA. Its operations must be driven by the dynamics and rules of the market, and then the board and the governance structures within that organization, not just NNPC itself, but all the other entities within the NNPC group. You must give them that independence to work and to run, right? So that's something that is really important, even if you're going to make any changes. Then again, I've spoken about regulatory capacity building, etc. So I think if we decide to carry on with some of these proposed changes, we need to pay attention to these things. And what I've done is just to point out a couple of what I think are key points that we should pay attention to in terms of not just the impacts, but certain guardrails that we must put in place to ensure that these changes do not then derail from the progress we've had on the market over the last several months.
Thank you very much, Mr. Osuji. It's clear that the fiscal, commercial, and of course, the host community, all those concerns and stakeholders are very important to make sure that whatever amendment to PIA is just inclusive and, of course, drives us to sustainable growth. But let's look at a big investor in the industry, massive investor. I'm happy it's a domestic investor, the Dangote Petroleum Refinery. It's had its own fair share of evolving around this PIA, especially from human capital with the Petroleum Natural Gas Senior Staff Association of Nigeria, Pengasan, and the Petran, other stakeholders in the industry. What are the lessons to learn that are in the interest of the nation? Because this is someone, Alhaji Aliko Dangote, looking at investing in oil and gas, believing in the country. What are those lessons?
So I think it must go slightly beyond the person or the personnel of Dangote himself, but to look at that Dangote refinery and the ecosystem around it. And this is really quite an interesting conversation because the country appears to be divided. Some people are pro the unions and some people are saying, then Dangote do what he has to do. I think the important point to recognize is that that's a private refinery, right? It was funded largely through, private capital and finances taken from a bouquet of financiers. But at the same time, given the strategic role that refinery is playing in the midstream and downstream space, you can almost call it a national asset, because what it's supposed to do is to take over from rather moribund refineries, and then begin to then translate us to a net, not just sustainability in terms of domestic utilization, but a net exporter of petroleum products. So it's a private refinery, but at the same time, it's a national asset of somewhat. So, and as I mentioned, not just because of its scale, but because of the transition in itself is strategic. So this tension that we're then seeing between the unions and the Dangote itself, it's sort of I would call it a structural issue, and it's a delicate balance between private capital on one hand, as I mentioned, and the national interest, right? Labor concerns, I would imagine, would go around transparency, local, participation, making sure you have more Nigerians working, types of employment, etc. And all those are valid concerns. But at the same time, they have to be carefully managed, not through dispute, but I think for me, it's through dialogue and institutional mechanisms. So it shouldn't be confrontational. So I think the real concern is that we are trying to drive industrialization, but at the same time, the labor union says there must be inclusivity. And I think both of them can also, if you ask me, go hand in hand. So when you want, for example, you want to attract large-scale private, enterprises and investment in refining, gas, petrochemicals, etc., 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 you must remember that at the same time, that must operate within an ecosystem. The local content input that's some area we need to make, pay attention to. But at the same time, the concerns of the labor have to be taken into consideration. So what I would say is that it's important that the parties on both sides of the fence adopt a partnership mindset. It really should be working together to achieve a common goal, rather than that it's your way or my way. So I think this Dangote is a test case for me, because this is, at this scale, this is the first time we are seeing this sort of competitive tension. If it's managed well, then it could actually become sort of a model that we can then begin to replicate for other large-scale investments in the sector. So, because again, as I mentioned, industrialization in itself and inclusivity must work together, right? So, because the project itself, and I mean Dangote Refinery, it's, like I said, it's a private project, but it's not just a private project. It's actually a pivot for our self-sustainability in terms of domestic utilization of petroleum products, as well as pre-positioning ourselves as a net exporter. So it's important. So while the conflict is inevitable, as we've said, but I think it's something that both Dangote itself and the unions themselves, working with the regulators, must come together, identify the areas of conflict, and then prioritize dialogue and then common goals. And I think if they can do that, we can manage somewhat to deal with some of the issues. Parties will not necessarily have what they want 100%. Again, because I mentioned this sort of underlying conflict between private capital and enterprise, as well as inclusivity. But at the same time, I think it's something that can be achieved if parties dialogue and work together.
Thank you very much. The Dangote Petroleum Refinery is a test case for more private capital investments in this industry, and believe that this would be a signal to how we can improve in the industry. But last week, Shell announced a $2 billion final investment decision for development of the H1 offshore gas field, OML 144. That's a major milestone in supplying 350 million standard cubic feet of gas per day. Is this a good indicator of more significant gas investments to come? And what's the horizon for LNG investments in the country? Mr. Chukwuemeka, you will take that for 1 minute if you can, as we begin to round up.
Okay, what I'll say, it's a positive signal, and as you know, I'm somebody who's very passionate with gas, and I'm leading the gas project in Olaniwun Ajayi. So it's positive. It shows investor confidence. It shows that the market is really transiting, and it shows that we can then begin to walk the talk. With a decade of gas is the cornerstone for the economy. So it's something that can be achieved. So for me, just to cut straight to the chase, I think this is a clear signal of increased in investor confidence. And it's also important for strategic projects like our NLNG project, for example. Those reserves, to the extent to which they feed the NLNG plant, will continue to support that plant to do the marvelous work it's been doing over several decades. So gas for me, it's not just a transition fuel, it's actually our foundational fuel. And this Shell's FID for me is a signal to the market, because the market is actually just reacting to what's seen. So I believe Nigeria's gas story is only just being written, and that the next chapter really is about infrastructure. So building on this, I think there are better things to come ahead.
better things to come. The next chapter is infrastructure. And of course, as we wrap up, the House of Representatives Committee on Petroleum last week had their session, and they've called for monetization of Nigeria's oil and gas assets as the world is witnessing energy transition. But within the context of that legislative push, are there pathways for financializing assets like the NNPCL? We've talked about it before several times, and the LNG for market value in overall, as we wrap up.
Well, what I would say very quickly is it's important to note, monetization shouldn't be sort of like a fire sale, right? It should actually mean value creation through structured financial innovation. That's really what monetization is about. So the conversation must be grounded in what I call economic realism. So it's not really about just sale of assets. We need to look at NNPCL, look at the strategic assets we have in the country and say, what are the structures that we're putting around any conversation we're having? Governance framework, transparency, strengthening reporting, ring fencing assets, and then of course aligning with even global, growing global standards, for example, like ESG disclosures, for example. So it's not just about the sale or the monetization of assets. It's really about what is driving this and what are the guardrails we are putting around it, and more importantly, how are we using this to continue to grow the asset base? So we shouldn't confuse monetization with liquidation, right? It really should be a process that should unlock, again, as I mentioned, increased governance, transparency, commercial realism, etc. So I think the legislation should just pay attention to these things, and it's important that any decision that's being taken shouldn't be taken because we need cash. No, it really should be long-term decision making that looks at the long-term value and that sort of rebounding effect of any decisions you will take into. If you want to monetize an asset, what are the alternatives, etc. And again, as I mentioned, what guardrails are you putting around it? So if governance is strong, that's what I always say. So if governance is strong, then capital will always find its way. So I think for us, particularly for the legislative arm of the government, we need to continue to ensure that governance is strong. And in today's new world, transparency is key. Transparency is almost the new capital or collateral in global finance. Investors must see transparency, they must see strong governance. And if that is done, I think capital will find its way. And these assets can then really become what they truly are, assets in the true sense of the word.
Yes. Discipline implementation of the PIA, governance, structured financing, innovation, and of course, using the Dangote Petroleum Refinery as a test case is critical as we look at how we position the oil and gas industry for investments and sustainable growth. And of course, we'll now be seeing our companies or state-owned enterprise compete with the like of Petrobras, Saudi Aramco, and the likes. Very interesting conversation and enriching one with you, Mr. Chukwuemeka Osuji, partner oil and gas, Olaniwun Ajayi legal practice firm. It's always nice to have this conversation with you. And maybe next time we talk, we should look at local content, moving to regional content, and how we can grow the industry. But thank you once again for the time, Mr. Chukwuemeka Osuji.
Thank you very much. As I mentioned, it's always an absolute delight to be here.
Thank you very much. So our viewers, if you want to get further insights on this interesting conversation in the oil and gas industry, visit the ProShare website displayed on the screen and follow our social media platforms to engage. Till we come your way again, keep tabs with socioeconomic developments around you. I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.